What's going on, guys? I want to give you guys some mental tips of mine that I use day in and day out for trading futures. Now, again, these tips are going to be mainly for people who are trading prop firms, whether you guys are in the evaluation stage or you're in the funded stage, or you're just starting off learning how to trade futures. Some things that I like to remember, some rules that I like to set for myself is if I catch a momentum play, or a news related play, or something that has to do with numbers or headlines, and I'm lucky enough to be on the right side of the trade, consider that a one and done trade, okay? Because a lot of times what tends to happen is, for example, today we had CPI numbers come out. The market did not like the numbers. The reaction was definitely bearish. It was a 300-point range candle. Now, I know from experience that sometimes we anticipate what's going to happen, and then we hesitate to pull the trigger when the setup confirms. However, we jump in late, okay? It's happened to me hundreds of times where we get some type of, for example, CPI numbers and the market starts selling off, and I miss my initial entry through overnight session lows, and it's going down. And it's going down, and I'm maybe watching the 5-minute time frame, and it continues to go down. And I tell myself, let me jump in on this momentum, but let me treat it as a scalp. And I get into the trade, it goes green, I get out, I wipe the sweat, and I look for another trade. That's one thing that you want to get away from, is if you do take a momentum play, which is purely news related driven, headline driven, numbers driven, something, right? Something where there's a catalyst, where the price action's moving fast and it's breaking through levels, or it's screaming higher, and you enter the trade late. If you go positive, please stop trading on the day, okay? Because more times than not, you will sit there and get overconfident and start to overtrade and give everything back, which will result in putting you on full tilt. And then you'll start over leveraging. You'll start making and manufacturing trades, that setups that are not there, just because you're trying to get those wins back. Number two, if you're looking to pass a prop firm evaluation, you need to understand your risk prior to entering a trade. So for example, if the trade setup is a 25-point or a 35-point stop loss, right? You have to understand how many contracts realistically you can trade. If you're trading on the micro side and you're giving up 25 points on a potential setup, you're going to lose around $50 per one contract. So if you're someone who's putting on 4 contracts, 5 contracts, and you're not okay with losing $100, $200 on the potential trade, then you either A, need to not take the trade and make that a rule, or you need to size down from your 4 to 5 contracts and maybe play 1 or 2. Does that make sense? This needs to be a concrete rule that you have for yourself. Based on the setup, based on the risk, you need to quickly do some math and understand how many contracts you can actually play that you're going to be able to stomach. 3, if you have 1 or 2 or 3 losing trades off the bell, and let's say you're practicing good risk management where maybe you took a $40 loss here, an $80 loss, a $100 loss, it's a cup of coffee at the end of the day. Down 50, down 100, down 200. That money, those type of gains and losses, they come and go, okay? However, if you take 2 or 3, now this is going to depend on the trader. Make it a rule for yourself. If you lose 2 back-to-back trades on 2 setups, strategies that you normally take and you're comfortable with, and you lose 2 trades back-to-back or 3 trades back-to-back, it needs to be a hard rule. Either A, the market and the price action is not playing with us nicely today, come back tomorrow. Or you are not seeing the market clearly today, come back tomorrow. This needs to be a concrete rule. And why it needs to be a concrete rule is because so many times I see traders go down 2 trades, 3 trades. It starts off as not that big of a deal, down 100, 200, 300. And then next thing you know, they oversize and start manufacturing trade setups, and they start digging themselves in a deeper hole, trying to get back to break even. If you find yourself doing these type of things, the only thing that's going to help you is you, okay? No one can hold your hand. No one can make you stop trading. No one can knock common sense into you. No one can tell you that you're an idiot. You're just an idiot, okay? And I'm a biggest idiot of them all. How many times I've done this over the past 10 years? I cannot even count or begin to imagine how many times I've done this, where I go down 1-2 trades and I think, well, I'll just get it back. I'll find another setup. Maybe I'll look at another index or another stock. And then I just dig myself into a deeper hole, and I end up closing the day deep red and pissed off. Do not do this. Also, depending on the prop firm that you're using, whether you're using Top Step or you're using Apex or you're using one of these other companies that is out there, make sure you understand the rules. As far as, for me personally, Apex is more of a scalper's prop firm, where they got that intraday high watermark threshold trailing drawdown that follows you everywhere you go. Example, you're in a trade, you're up $250, the trade comes back down $150, you take $100 profit. From high threshold to where you took profit, you're putting yourself in a negative drawdown of 150. Now, again, you do have a running balance. It's not going to make you lose an account, but the more times you do this and hold these trades and allow them to go into profit and allow them to come back to break even or losers even, is going to help you blow up an account a lot faster than what you should be doing. If you're an intraday trader where maybe you're in a trade for 30 minutes or 1 hour or 2 hours and you need to give it time and you need to let this thing work and you're giving yourself a bigger stop loss, maybe, I would recommend Top Step. They do not have that intraday trailing threshold. Again, both prop firms are fantastic. They're both credible. They both pay out. But it's just for two different types of players, right? What type of player are you? Are you a scalper? Then go with Apex. They're cheaper. You can have more accounts. You can do more things. But again, if you're going to hold these trades in $500 worth of profit and then potentially go break even and lose it, you're going to be down 500. Go with a company like Top Step. Even though you're not allowed as many accounts, it's going to be more fitting to your trading style. So again, understand what your trading style is before you sign up with these prop firms. Don't just go with prop firms because they're cheap. Don't just go with prop firms because they have sales. Again, if you're not a scalper and you don't know how to scalp or you have no intentions of scalping, then I would probably shy away from Apex. It's just my honest opinion, and I trade with both of them, right? But I have some setups and strategies where I need smaller size and room to wiggle, so I'll use Top Step. And I also have setups and a personality where I do like to scalp, get in and out, and I'm going to use something like Apex for that. I hope this video helps someone out there pass a prop firm, get a payout. If it does, if you did like the video and you want more videos like this, make sure to like, comment, and subscribe. I will see all of you guys on the inside. If you guys do want to get started with Top Step or Apex, those links are down in the description box below. If you would like to trade with me, get access to my lessons, my video lessons that are private to my members, as well as trade with myself and the team and get access to one-on-one coaching and access to a community of traders that you can learn and build from, that link is down in the description box below as well. I'll see all of you guys on the inside.